Hello and welcome back to today's Morning Report. Charles Process on Friday the 9th of September with me, Rich Perry, market analyst at Handset Markets, looking at Eurodollar now. And we've got this sort of move on Eurodollar yesterday where you had the euro strength on the back of the ECB meeting, on the disappointment of lack of easing measures brought in, or extension of quantitative easing as well. And we had that move higher intraday, 13.20. So 13.25 was the reaction high, but then intraday it actually pulled back. But that pullback came with the EIA oil inventories report, which strengthened the dollar. Now, generally speaking, you'd certainly say the euro is sort of on an improving path again, having broken up above that pivot line at 12.33, now finding support on it, and I'll show you that on the hourly chart in a minute. But the improvement in the momentum indicators is taking off as well. Stochastics rising, RSI above 50 and rising, and the MACD line seeming to sort of bottom out and starting to possibly turn up again. So the general outlook is still pretty positive on Eurodollar, and you'd argue that sort of it's pulling higher. Looks like it's going to retest sort of the overhead resistance levels. So you look on the hourly chart and you'd say, well, yes, the euro is finding support around that 12.33 level, which was the old pivot line. 12.33 came into play quite a lot through August, and has since then, if I zoom in, it's now finding the lows around that. So 12.33 is still at a support area that the market is looking at for. Obviously, it's not to the pip. 12.27 was the low on the 7th before the rally. But it certainly seems to be that the correction and the dollar strength that we had yesterday in the wake of the EIA oil inventories report found support around that sort of pivot and rallied again. So the market is now improving its outlook on the Eurodollar. Certainly you'd say this corrective phase that we had late August is now turned over, and or turned around I should say, and is now looking increasingly positive. The MACD lines are the classic signal of that, having been consistently sort of below neutral, started to sort of pull higher and be far more above neutral. I wouldn't necessarily pay too much regard of that of what you could argue to be a negative divergence there on the MACD lines. I think you'd need far more pronounced sort of negative divergences across the RSI and stochastics to really count on that. But very near term, we've just had a rolling over the stochastics, and that could produce another little bit of a near term correction back towards that sort of 12.33 area. And that could produce another sort of chance to buy. I think that's a fairly positive area now that we could see sort of buying opportunities come in. And arguably, you'd say anything sort of around the sort of 12.10, so 12.10 to 12.33 area is probably going to be seen as a chance to buy. That's where the longer term hourly moving averages come in, and it sort of would give the RSI a little bit of an opportunity to unwind once again and give you a nice little chance to buy. So I think generally speaking the euro is still pretty positive. It's not sort of shooting the lights out in this rally, but I think there is still further gains to be seen in due course, and I think up towards sort of the higher 113s is certainly possible. 13.65 was that August high, 13.40 was the late August high, and I think these levels could well be tested in the coming day. So I wish you good luck in your trading today, and I will speak to you later. Thank you.